Hello everyone, and welcome to this specialist trading presentation of the correct way to trade candlesticks, and that's trading candlesticks with the pet D. Welcome, my name is Primo. I am the president and founder of Specialist Trading, and for those of you who are not familiar with our website, we are first and foremost an educational company. We take all the information, tips, techniques, and strategies that I've accumulated in my 38 years of trading, and then we supply you with all that information and mold a certain strategy or a plan for you in which to trade. It's more of a mentorship than anything else. Now, I have a lot of great free information to give to you today. It was things that you can start using as early as tomorrow. You can start applying them to your trading, even today if you'd like. But please remember that we can in no way guarantee that any of the results you are about to see that I'm going to be sharing with you will be repeated in the future, as you see our disclaimer right here. As I stated, I have a lot of slides to show you and a lot of great free information, but before we begin, I ask that you please take a moment here to sign up and follow us on Twitter. That's our handle right there, at SPCLSTTRADG. I post information on a daily basis, anywhere from signals that we're currently in. We gave a buy signal in the E-mini S&P a few days ago, as well as in the dollar yen. So not only just stocks, but also the futures and the forex currency pairs. Now, our sister site is Pro Trader Strategies. They market and promote all of my different strategies and techniques, and you can also like us on Facebook there by simply logging on to Facebook and then going on to ProTraderStrategies.com. I have many more bits of information, videos, and things such as that nature. So there are lots of ways to get information, free information on us by simply going on to Twitter or to Facebook as well. Now, once again, as I stated, we are first and foremost an educational company. And the reason why we focus so much on education, even though we have strategies that generate signals and generate buy and sell areas in which you to trade, we are more about educating you with this information, because it's our feeling that the reason why most traders fail is because they're relying on an outside source to tell them what to do. Think about your own trading. Are you relying on some trading guru or some indicator or someone on TV to tell you when to buy and when to sell? What that really means to us is you're just basically taking yourself out of the game. You've given your power to someone or something else to tell you what to do, and that's how most traders end up failing. So what we want to do is supply you with the information and then be with you there every step of the way so that you can ultimately make your own trading decisions. And another reason why most traders fail is because they overcomplicate their trading. It is the easiest thing in the world for anyone to overcomplicate a trading plan. Anyone can do that, whether you've been trading for 2 weeks or 20 years. It doesn't take a lot of character to do that. But it's the most difficult thing in the world to simplify your trading. Why? Because conventional wisdom tells us that the more we pile onto our plate, the more successful we're going to be. But in actuality, it's the opposite. It's the simpler you have your trading plan. As I've seen in my 38 years of trading, the simpler it is, the more likely you're going to be on that road to consistency. So this is what we teach all of our members and students at Specialist Trading. This is what turned my trading around when I first started trading, and this is what I teach to all of our members as well. Remember, simplicity equals consistency. Simplify your trading life and you'll get on that road to consistency. Okay? Now, once again, this is a class. I have a lot of information to give you today, so be sure and stay tuned. And I know you're going to have a lot of questions, but please wait till the very end so that we don't slow this down. There's a lot of great free information to give you, and I don't want to slow down the presentation. I'll just answer one question that I see a lot of people have been asking in the question and answer box. Is this going to be recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're having trouble with technical issues, you can contact the good people at Pro Trader Strategies and they will send you a link to this recording. Okay? All right, so kindly just write down your questions or kindly remember them, and I promise we'll get to them just as soon as we finish this. Okay? All right, so let's begin, and remember, we're going to be talking about candlestick trading today. First thing we want to talk about are candlestick patterns. A lot of people love to rely and depend on candlestick patterns. There's nothing wrong with them. We feel that they are a valuable tool when you want to trade and when you use them. In fact, here is a list of probably the most basic but the most popular candlestick patterns, anywhere from a doji to an evening star, as you see here. Let's just talk about what we feel is probably the easiest, the simplest one to implement and most popular. It's engulfing patterns. Okay? So let's review basically what an engulfing pattern is for those of you who aren't familiar with that. A engulfing pattern is a two-bar pattern. All right, you have bar number 1 here on the left, and you have bar number 2. And in a bullish engulfing pattern, what you're looking for in bar number 1 is to be a down day, all right, meaning that you open and then close lower, creating this dark body. Bar number 2's body, from the opening to the close, totally engulfs the previous bar. So it's kind of a mini reversal, a 2-bar pattern. And what usually happens, the edge with this pattern, is that you see upward prices continuing within the next 3 to 5 bars, whether those bars are daily bars or 5-minute bars. So it's a great edge to the upside. You also have the opposite side of the coin where you have bearish engulfing patterns. It's a 2-bar pattern once again, but the first bar in this case is opposite now. You basically open and then close higher, but then bar number 2 opens above the close and then closes either at or below the opening. So the dark body of bar number 2 totally engulfs the open body of bar number 1. So it's kind of a mini reversal to the downside. This once again is a great edge. Why? Because for the next 3 to 5 bars, regardless of what time frame you're in, you'll most likely have a continuation in that downward move, or the move of bar number 2. Now, here's the popular definition of engulfing patterns. The engulfing candlestick pattern is a reversal pattern, usually occurring at the top or bottom of a trend. So we're looking for some type of trend, then we find that reversal pattern, that 2-bar pattern, either an engulfing pattern or a bullish engulfing pattern or a bearish engulfing pattern, and that means trends should usually reverse. Okay, this is conventional wisdom. This is the way the majority of people trade engulfing patterns. And if we look at a chart here, this is what usually happens. Not all the time, but you're going to see this happen a lot, whereas you have a downward movement. Okay, you have a downward movement in the stock, and then lo and behold, you have a bullish engulfing pattern. Okay, so right now you're thinking, well, I've read all the books, I've gone to the candlestick presentations and seminars online, and we have a downward trend here, and now we're met by this reversal pattern. So this means the trend is probably most likely going to stop, and we should be going higher. So you jump in and buy, and then look what happens. Okay, and you start to think, boy, that's not the way it's supposed to work out here. I've got a pretty big loss. But then you see another bullish engulfing pattern. You think, well, maybe I jumped the gun too soon. This is where the trend is ending, and so this is where I should buy. After all, it is a bullish engulfing pattern, and that means it usually happens at the bottom of a downward trend. So you step in and buy again, and look what happens. Does this look familiar to anyone? Because this is the way most people trade bullish and bearish engulfing patterns, and for that matter, most candlestick patterns. So this is our belief at Specialist Trading. This is what I've picked up in my 38 years of trading. How do we increase our odds for success when applying the engulfing patterns? Well, candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. You see, this goes against conventional wisdom of where we're trying to pick a top or a bottom, because that really, what I've seen in my career is a recipe for disaster, trying to pick tops and bottoms, because there is no such thing as a top and there is no such thing as a bottom. Usually you find out after the fact. But we've seen markets continue to go higher and higher, and we have tons and tons of bearish engulfing patterns, and it continues to go higher. The trend never turns around. Same thing with the market going lower. We'll see continuous bullish engulfing patterns, and it continues to go lower and lower. So there is no consistency in applying these type of candlestick patterns where you want some type of stop and reverse. It's better to apply these candlestick patterns when you have them in sync with the trend. All right, so let's see what the trend is. When we are applying the trend, we use our proprietary tool, which is called the PET-D. And what this is a color bar tool, which tells us automatically what the short-term trend is. So when you see a series of green bars, we know that the short-term trend is up. When you see a series of red bars, the short-term trend is down. It's that simple. So now all we have to do is pick out those candlestick patterns that are in sync with the trend. Remember, we want to be swimming with the current at our back. We want to be going downstream. You don't want to be swimming upstream. But that's the way most people trade. They go against the trend, and it'll work for a few times, but most often it doesn't, and you wind up giving everything back. So when we're trading bullish engulfing patterns, how do we trade them? Well, we only want to buy an engulfing pattern, a bullish engulfing bar, if the engulfing bar or both bars are colored green. Remember, we're applying the PET-D to tell us that we're in sync with the trend. So either bar number 2 or both bars must be colored green. Now conversely, if we're applying a bearish engulfing pattern. We only want to sell if the engulfing bar, which is bar number 2, or both bars are colored red. Okay, so let me show you some examples here how simple but powerful applying these two techniques are. Let's start off with stocks. We have a lot of stock examples. We'll start off with some older examples, and we'll show you examples later on that are as old as just a few days. Here's an older chart of GoPro, and you can see here that we're kind of heading upwards, and then we see that we have a nice bullish engulfing pattern. Now you think, well, boy, you don't get a bullish engulfing at the top of the market, so should I take this or not? Well, when we apply the PET D, we see that all the bars are green. And all we're concerned about is that either the engulfing bar is green or that both bars are green. In this case, both are green, so you would have taken this signal to go long. And you see how it would have worked in your favor. We weren't trying to pick a bottom. We were just simply going in flow with the trend. Now, you had a really nice run up here, roughly about 20 points in GoPro, and then all of a sudden, you're met with a bearish engulfing pattern here. Okay, you see how that works? Now, it's at this point where most people would say, that's it, that's the top, because this is a reversal pattern. But remember, in order for us to take a bearish engulfing signal, we have to have one or two of those bars colored red, and they're still colored green. So this would not be a sell signal in our mind. This would not be an indication to get out of the trade. As you see here, we kind of went lower to sideways, but really not enough to cause any damage, and we're met with another bearish engulfing pattern. But you know what? Both bars are colored green, so we're not going to sell. And then look what happens. To see how the PET D, the color bar algorithm, is keeping us long because it's telling us the trend is still up. Even though we went sideways, a little bit lower to sideways, it still kept you long, therefore you didn't lose any money. Now the stock continues to go up higher, and you have another bullish engulfing pattern giving you more confidence that we're going higher, and it continues to go higher. Okay? Let's look at another example here of NFX. All right? Older chart here, but obviously as you see, it's been going lower. So at this point, you're thinking, well, the trend is down, and then you see a bearish engulfing pattern. Now, everything you've been taught, all the books you've read have told you that you're only supposed to trade bearish engulfing patterns at the top of a trend, because after all, it's a reversal pattern. But as we see here, we're going lower. So how can this, be a trade that we feel confident in taking? Well, the way you feel confident in applying this is by implementing the PET D. And as we see here, all the bars are red again. Remember, we only needed that bearish engulfing bar to be red, but this gives us more confidence because the PET D is telling us we're in a clear-cut downtrend. There's no reason to go long or pick a bottom. That's a recipe for disaster. So you see that it goes a little bit lower, but really not that much, but then we're met with another bearish engulfing pattern. So giving you a little bit more confidence that we will go lower, and then ultimately the momentum kicks in and the stock drops a good 10, 12 points. Remember, we weren't trying to pick a bottom. All we're trying to do is be in sync with the trend. How about CVX? Same thing here. Now we're in a downtrend. Obviously, we've been going lower from roughly 130 all the way down to 122, 8 points. And then, lo and behold, we have a bullish engulfing pattern. Everything you've been taught tells you this is the bottom you have to buy. All right? But remember, we said there's no consistency in that type of trading. There's no consistency in picking tops or bottoms. That's a recipe for disaster. The only consistency you'll get in the market is when you are in sync with the market. So therefore, we apply the PET D. And the PET D is telling us the trend is down. So there's no reason to go long if the trend is down. And as you can see, we went lower. Now the trend goes down again. We have this bullish engulfing pattern. Don't want to take it. Why? Because the bars are red. And look how this tool, the PET D, would have saved you a lot of money. You would not have taken those signals. But the majority of candlestick traders would have because they were always taught that those are bullish patterns. How about ABX? Obviously, this has been in a downtrend. Looking at this in hindsight, you would say, boy, I wouldn't touch that with a 10-foot pole. There's no way I would ever think of buying this. But if you were, staying true to bullish engulfing patterns, you would have seen that there were three bullish engulfing patterns the entire way the stock went down. So had you relied on bullish engulfing patterns, you would have lost a lot of money, 3 losing trades. But had you simply applied the PET D and been in sync with the trend, you would have known right from the beginning that there's no reason you should be taking any long signals. Why? Because the trend was down, and the PET D was giving you that early warning indication, okay? Remember, the PET D is not an indicator, it's simply a trend identifying tool. Its main job is just to identify the trend. That's it. It's not a system, it's not a strategy. It doesn't come with buy and sell arrows, telling you when to buy and sell. It's just a great tool for really refining what the trend should be. Look at some more examples here. KLAC, and a lot of people will say, well, what happens when the trend suddenly changes, as it did here? As we see the first half of this chart, KLAC was going straight up, and then all of a sudden in October, it started to head straight down. How could the PET D applied with bullish and bearish engulfing patterns help us? Well, if we look at the first part of the scenario, we had a number of bullish engulfing patterns telling us that we're going higher. Now, obviously, the trend did change, and you were issued another bearish engulfing pattern right here. So you would have had a minor loss had you just purchased at these points, but you could have made it all back by taking advantage of this. Why? Because bar number 2 in the bearish engulfing pattern was colored red. So to see, the market told you in advance by applying the PET D that we were going higher way back here, and then as early as the beginning of October, it gave you signals it was going much lower. Let's look at a current chart, or a recent chart, I should say, of Boeing, BA. Now, looking at this chart, we know that all the colors are green when the PET D has been applied. So it's telling us, even though the chart looks like it's going sideways to maybe a little bit higher, the trend is up. So if the trend is up, then we can take advantage of these two bullish engulfing patterns that we saw here. This was just roughly about a month ago in mid-January. So someone would say, well, this stock looks like it's going to fall out of bed. It's kind of rolling over. But we know that once we have the PET D, we know that you don't short when the bars are green. You only look for buy setups. And we had two great buy setups here in the latter part of January. And then look what happened, okay? Someone looking at this in hindsight would say, boy, well, how did you know that Boeing was going to go higher? Well, the market was telling you, okay? We had two bullish engulfing patterns, and it was confirmed by the trend. You see, there's no reason to overcomplicate your trading by looking at fundamental news, by listening to trading gurus on TV or online, or by being in trading rooms or chat rooms. All you need to know is what the market is telling you, and just focus on the chart in front of you, rather than focus on outside sources telling what you should do with your trading. How about Amazon, okay? Once again, this chart is going into February. Looking at this, it's kind of headed a little bit higher, but you know what? You're greeted with a bearish engulfing pattern. So if you've been taught that bearish engulfing patterns are to be sold, meaning that you're at the top of a trend, you probably would have sold this and thought, well, Amazon is going to roll over, and I'm probably going to make a lot of money. And remember, you don't even have to purchase the stock, to go short the stock, I should say. You could purchase options. You could purchase puts on this. It doesn't matter what you apply in your trading vehicle. So had you taken this short signal, well, let's see if it would have worked out. Firstly, what we teach our students is to apply the PET D, because that will tell you if you're in sync. Now, if you're going short, the bars must be red. And if you're going long, the bars must be green. But in this case, a short signal was followed with two green bars. So they're not in sync with each other. You're not in sync with the market. The market is telling you it wants to go higher, but you're selling. So you're out of sync with the market. If the market wants to go higher, you should be buying. So had you sold, you would have had a large loss on your hands, okay? We don't know. There was obviously some news or some event came out in Amazon 2 days later. We have no idea what that is because we don't follow fundamental news. We don't need to, because the market told us in advance of that large gap up that the market is going higher. So that's all we needed to know. How about MOS? Same thing here. This is in the first couple of weeks of January. Someone just looking at this at face value would say, well, Steve, there is no real trend. We're just kind of going sideways, so I'm not really going to do anything. But if we apply the PET D, we see that there's a bullish engulfing pattern, and then the bar number 2 is colored green. So this is actually a buy signal. This is giving you confirmation you can take this bullish engulfing pattern that most likely the market will go higher. And then we see it did. Remember, all we need is for bar number 2, the engulfing bar, to be in sync with the signal. That's all we need. So if we had a bullish signal, as in this bullish engulfing pattern, we just needed bar number 2 to be colored green. And it was, and you see the stock went roughly from 46 up to 52 in just 2 or 3 weeks. How about XLNX? Once again, this is coming in, a recent chart coming into the beginning of the year, just a couple of months ago. We were originally green in this chart in the top left-hand corner, but then the PET-D configured that we were now in a downtrend, so all the bars changed to the red color. Since the trend is down, we're looking for sell setups. And here was 2 sell setups, 2 bearish engulfing patterns. So these were sell setups that you could have taken and should have taken. Why? Because you're in sync with the market. And we see what happened to XLNX. Stock went from 44 down to roughly 38 in just a couple of weeks. How about crude oil? Now, a lot of people have lost a lot of money trying to pick a bottom on crude oil. And why have they lost money? Because, once again, you're swimming upstream. You're trying to pick tops and bottoms. It doesn't work. You know, there's no consistency. It will work every once in a while, but trust me, the times that style does not work, you give everything back. It's much easier to be in sync with the market. That's the beauty of the PET-D. The PET-D automatically gets you in sync. So as you can see here, from October into December, all of the bars were red. So therefore, all we should have been looking for were sell signals. Now, as we see here, the market was giving us sell signals all the way down, coming into the new year, coming into December actually. It was telling us, we're going lower, why don't you sell on these bearish engulfing patterns? And had you taken advantage of that, you could have done quite well coming into February of this year. Okay? See, trading is really simple. It's just that we overcomplicate it by bringing in all this outside noise. Once again, you know, too much focus on outside tools that are supposed to be telling us what to do. Once you learn how to listen to the market, all you have to do is just jump on board. How about the E-mini? Okay, we showed you stocks and commodities. Let's look at the E-mini. Here's a 10-minute chart of the E-mini, as we see here, an older chart. Looking at this, the market is going up on a 10-minute time frame, and then we have 2 bullish engulfing patterns. Now, this goes against everything you've been taught. You thought, well, I'm supposed to look for bearish engulfing patterns because they're reversal patterns. But if we apply the PET-D, we see that the trend is up. So these are signals that should be taken to go long. In other words, the market is shouting out, I'm going probably higher based off of these 2 setups here. So as we see here, the market did go higher, but then it kind of pulled back a little bit. But while it pulled back, all of the bars continued to remain green. And we were met with another signal coming from the market telling us, I'm going higher. So there was your chance to get in again. Now, it doesn't look like these are big moves, but these are roughly anywhere from 5 to 8 points on the E-mini for each move after those signals. That's anywhere from $200 to $400 per contract. Now, as the market goes higher, what do we find here? We see a bearish engulfing pattern. Now, this bearish engulfing pattern, in order to take it, bar number 2 would have had to have been red. But as you see here, it's green. Both bars are green. There's no reason to go short. The PET-D is telling us the trend is still up, and as you can see, it was. You see how simple it is to be consistent when you're in sync with the trend. And there was another bearish engulfing pattern there as well. I'm glad we didn't take that because you would have missed out on another 5 or 6 points on the E-mini. Now we can go to a smaller time frame. Let's go to a 2,000 tick bar chart. Once again, just looking at this roughly up in the last couple of hours of this day, the market was going higher. And we had a bullish engulfing pattern, the first pattern we saw here. We had a bearish engulfing pattern, and then we had another bullish engulfing pattern. So right here, here's your test. Which one do we take? Should we take the first bullish engulfing pattern? Should we take the bearish engulfing pattern? Which is the correct signal? Well, you don't have to figure that out. You don't have to figure out what the indicators are all saying. You don't have to look and watch TV and see what some trading expert is telling you. All you have to do is apply the PET-D. Remember, these engulfing patterns must be in sync with the trend. So if we apply the PET-D, we see that nearly all the bars are green, telling us that the trend is up. Therefore, you would not take this signal. You would take all buy signals. And look what happened, okay? The E-mini went up from 1950 to 1956 in about an hour, so that's roughly $300 per contract. Now, as it went higher, what do we see here? All along the way, the market is giving us more and more clues that it's going higher because it keeps feeding us bullish engulfing patterns, and they're colored green. Now, as we come up to the very top level, what do we see? We see a bearish engulfing pattern. but the bars are green, so we don't take it. We stay long. Now, the stock, or I should say the E-mini does go lower, and now we're met with another bullish engulfing pattern, so we take advantage of that. But lo and behold, we don't go any higher. So this is the market telling us that it's given us buy signals, but it's not going higher. In fact, it's starting to produce a red signal. And if we look at that even closer, we now have a bearish engulfing pattern. All we need is for bar number 2 to be colored red, to be in sync. All right? So from this point all the way up to here, we've been long, but at this point we see it's time to get out. And in fact, you may want to go short because this is a valid setup to go short now. So you could have exited your long positions and gone short. Obviously, we're not going to get the highs, but we're going to try and get out as close to the highs as possible. And look what happened. Once again, the market tells you everything you need to know. All you have to do is learn how to listen to it. And we can apply the same technique, the same rules, everything to the Forex markets where people love to apply candlesticks. We look at an older chart of the dollar-yen. Obviously, it's been going higher. Once we apply the PET D, we see that all the bars are green. So all along this entire uptrend, the market has been verified by the PET D. Okay? Now we look for bullish engulfing patterns, and the entire way we've been giving signals to go long. Not only at the top here, but way back here at the bottom, we were given a signal to go long. And it was confirmed by the PET D. We got another one here, another one here. These are literally thousands of dollars you could have made on this dollar-yen trade. Now, we're still long, and guess what? We continue to go higher and higher. All because the PET D assured us that we're not looking for bullish engulfing patterns at the bottom of a trend. We're not looking for a reversal. We're looking just to buy those in sync with the trend. We could apply this to the downtrend as well. Now the euro dollar is going lower, and what do we see here? All the bars, nearly all the bars, are red. So this means we're not going to look for bullish engulfing patterns. We're only looking for bearish engulfing patterns. And as we scan here, we have two very nice bearish engulfing patterns that are confirmed by the PET D. Now right here at the bottom, we have two bullish engulfing patterns. Are they confirmed by the PET D? No. So it just means we stay short. And look what happens. Now, all the way down, we had more bearish engulfing patterns telling us to go short. We had a few bullish engulfing patterns, but they were both red. They were out of sync, so you wouldn't have applied them. You would have simply ignored them. All right, so let's recap. Now, we only want to buy or sell candlestick patterns. Today, we only talked about bullish and bearish engulfing patterns, but this can virtually be any pattern. It doesn't matter. It can be dojis, it can be evening stars. It doesn't matter, hanging men. It just matters that you use whatever candlestick pattern you apply in your trading. It must be in sync with the trend. Don't use candlestick patterns that are looking for bottoms or looking for tops. I know we've been taught that they're reversal patterns, but in my 38 years, I have found no consistency in using them as reversal patterns. They work much better when they are in sync with the trend, okay? So only buy or sell candlestick patterns, whichever one you want to use, that are in sync with the trend. Now, up until now, all we've given you is just a way to trade candlesticks. Everyone has their own method for trading candlesticks. We haven't talked about where you're going to enter. We haven't talked about where you should exit. We haven't talked about where to place your stop, or even where you should trail it if you're in a very profitable trade, where you should move your stop in accordance with the direction of the trade. Now, as a bonus, the beauty of the PET D is that it can also be applied to confirm strategy signals that are totally different. In other words, we don't need just apply this to candlesticks. We can also use this on a strategy. So you can be right now trading a strategy that you feel comfortable with, and you can say, well, I'm doing okay with this, but it's nothing great. Well, you could apply the PET D to that. You could just say, whenever you get a buy signal with whatever strategy you're trading, the bar must be colored green. Whenever you get a sell signal with whatever strategy you're trading, the bar should be colored red. So the beauty is it can also be used to confirm strategy signals. Now here's the problem. I know a lot of traders are saying, well, Steve, I've been burned. The couple of strategies that I purchased or that I've been using, they don't work at all. I mean, there's no consistency either way. I mean, the minute I got it, it stopped working. I spent thousands of dollars on some technique or some webinar, and it doesn't work at all. Well, here's the beauty of this. We have a great strategy that we're teaming up with the PET D and a special offer you that works fantastically. In fact, we call this our dynamic duo. Strategy 4 comes with complete rules for entry, for exit, stop placement, for tracking while the trade is in progress, for moving your stop to unchanged, for trading it more aggressively, for trading it more conservatively, whatever way you like to trade it. And it has an even higher level of consistency once you apply those signals with the PET D. In fact, let me show you some recent examples in all markets. These are recent signals, and let's start off with stocks first. This is in Starbucks, SBUX. This is coming into February. As we see here, once again, it looks like there is actually no trend in place. But strategy number 4, even though we're showing candlesticks, does not rely off of any candlestick pattern. It looks back roughly about 10 bars to come up with a specific pattern recognition. And then once it does, it generates a setup bar. Now what we're saying is that setup bar should be colored green. Now on the 16th of January, it gave a buy signal in Starbucks. The only trouble is, you may have been burned, maybe you had some losses in the past and you're kind of frightened and you're thinking, well, should I take this signal? The other strategy I was trading didn't work at all. How do I know this is going to work any better? Well, even though we can't guarantee that all signals are going to be profitable, we can ramp up our odds for success. How? By applying the PET D. So when you get a buy signal in strategy number 4, that setup bar should be colored green. So if we applied the PET D, we see that yes, it was colored green. So that gave you the confidence to go long Starbucks just roughly 2 or 3 weeks ago. And in 2 weeks, you would have gained 10 points. Okay? See how simple that is. Why? Because it's being confirmed. The signal is being confirmed by the PET D. How about KR? Same thing. We had 2 buy signals here, one on the 7th of January, one on the 2nd, just a week or so ago, 2nd of February. And if you'd taken the first signal, you would have 7 points in roughly 2 months. Both signals, you see right there where the green arrow is, were both confirmed because the setup bar was colored green by the PET D. If we look at RIG here, we see this is an older chart of RIG, oil driller. We had a signal to go short on November 10th. Okay, this is about 3 months ago. How would we have the confidence to take that short signal? How do we know, the stock's going to go down? Well, we simply apply the PET D, and remember, for buy signals, the setup bar should be green. For sell signals, the setup bar should be red. So once we apply the PET D, we see that yes, the bar is red. Remember, this is not based off an engulfing pattern or any type of candlestick pattern. This is just simply based off a pattern recognition that I was taught on the floor of the Pacific Stock Exchange when I worked there some 30 years ago. So this is a valid signal to go short with a PET D and 13 points in 1 month to the downside. Okay? If we have a signal here in LinkedIn, as we see here, this was on the 29th. This was just about 2 weeks ago. The strategy generated a buy signal on the 29th. If we apply the PET D, we see that that setup bar was colored green. So it gave us the confidence to take that signal just a couple of weeks ago. And look what happened. 45 points in 2 weeks. Okay? Now, obviously, there was some announcement or something came out where the stock went straight up. We didn't have any idea of that. The market told us through strategy number 4 that it was going higher. It was confirmed by the PET D. No one called us up and told us that LinkedIn was going to be up close to 50 points in the next couple of weeks. But the market told us it was going higher. About Yahoo, this was just a couple of weeks as well. We don't care whether the market's going up or down. We take each individual signal for what it is. So when LinkedIn was given a buy signal some 2 weeks ago, Yahoo was given a sell signal. All right, and it was confirmed by applying the PET D because all sell signals need to be colored red. So you could have gone short Yahoo and in 2 days made roughly about 6 points. How about GLD? Now this is the ETF for gold. This was just about a month ago. We were confirmed with a buy signal and it was confirmed with the PET D because the PET D colored the buy setup green. All right. Now we had no idea what was going to go on in gold. Gold had been going lower and lower. How do we know that this buy signal was going to work? We don't. There's no guarantees, but we have the odds in our favor because the PET D is confirming this. And so you could have taken that signal and made a good 9 points in 2 weeks. And if we look at GoPro again, here's a very recent signal from last week. This was on the 4th, okay? The 4th, strategy number 4, generated a sell signal. Guess what? It was confirmed by the PET D. So this was telling you it's okay to go short GoPro on the 4th of February, just a week or so ago. All right? You could have taken that short and 8 points in just 1 week to the downside. Now let's look at this, how it applies. The strategy number 4 applies with the E-mini. If we look at a daily chart of the E-mini, we've had 2 signals going back to the first of the year. There was a sell signal on the 9th of January, and then we had just another buy signal just a week or so ago on the 3rd. Both worked out very nicely. But, you know, as we stated, there's no guarantees when trading. So how can we ramp up the odds in our favor to give us confidence to take the trade? Well, we simply apply the PET D. The sell signal was confirmed. Why? Because the bar was colored red. The buy signal was confirmed. Why? Because it was colored green. So roughly, if you would have traded these to their max, you could have generated roughly 65 points or about $3,000 per contract, per individual contract in the E-mini in just 2 months, taking these 2 signals. And then we can look at a 10-minute chart. As we see here, this is from just 2 days ago. This was Tuesday the 10th. If we're looking at a 10-minute chart, we see here that on the opening of this day, this is Pacific time, roughly 6:30 up until 8 o'clock in the first hour or two of the market opening on a 10-minute time frame, we see here that strategy number 4, remember, we're not using any candlestick patterns in this strategy. This is a totally different pattern in and of itself. But strategy number 4, which has a high level of consistency by itself, generated a buy signal at roughly 8 o'clock Pacific time to go long the market. Now, we weren't in some trading room or some chat room talking with somebody who looks at support and resistance or Fibonacci levels. We're only looking at what the market is telling us. We don't want to overcomplicate our trading. And at that point, the strategy number 4 rules said a buy setup is in place. Now, you could simply take that trade, but if you wanted to feel more confident, well, you must apply the PET D, and that setup bar should be colored green. Well, if we apply the PET D, guess what? The bar was green. So that gave you the confidence to take the trade, and in the next 4 hours, you could have made nearly, or over actually, 17 points if you stayed long that entire time. That's about $850 per contract, just because it was confirmed by the PET D and you were in sync with the trend. And lastly, you can apply this just as easily to Forex currency pairs. All right, if we look at the Canadian dollar, on the last day of the year, we see here that strategy number 4 generated a buy signal. Now, you know, the Canadian dollar had been going higher, but for the past 3 or 4 weeks, it was just going sideways. So why would you want it to go long? Maybe it was just kind of topping out or going nowhere. Why would you want to tie your money up? Well, if you applied the PET D, you would have seen that the PET D was telling you this whole time the Canadian dollar was in an uptrend. So why not? It's telling you that it's most likely going to go higher. So strategy number 4, based off its proprietary pattern recognition, generated a buy signal, and look what happened. It went up roughly, I believe it was about 800 pips in the next couple of weeks. Now, we see here that it wasn't time to get out. Why? Because the bars were still green. And another signal was generated just a couple of weeks ago on the 15th. So you could have stayed long or purchased some more, and you basically would have generated 1,200 pips in just 1 month. Now, for those of you who don't trade the currency pairs, that's close to $10,000 per lot, okay? Just since roughly the beginning of the year. Once again, strategy number 4 has a very high level of consistency, but when you apply the PET D to that, you ramp up its odds for success even more. So let's recap before we go to questions and answers. We share with you the correct way to trade candlesticks, and that's with the PET D. Why? Because the PET D gets you in sync with the trend. I know we've all been taught, myself included, when I first started trading candlesticks on the floor of the Pacific Stock Exchange, I was taught that they're reversal patterns, that's what we're looking for. We're looking for some type of trend reversal, and when I started trading them, you know what? They worked pretty well, but then when they didn't work, I gave everything back because I was trying to pick a top or a bottom. It wasn't until later that I found out that candlestick patterns work much better when you're in sync with the trend, as opposed to trying to use them as counter-trend objects, all right? And then how do we be in sync with the trend? Well, the best tool I know is by applying the PET D. Now, candlesticks are not a full-fledged strategy. They're just a pattern, okay? They're just a kind of a signpost telling you what they think is going to happen, all right, for the next 3 to 5 bars. So I know a lot of you don't have actual rules for a strategy, or perhaps the strategy you've been trading is not showing you any type of consistent results. That's when I introduce you to strategy number 4, probably our most consistent strategy to trade. It works in any market, in any time frame. Just by itself, it has tremendous consistency. But when you apply the PET D, you ramp it up even more. Okay? And then we showed you the dynamic duo, which is applying strategy number 4 with the PET D. This is what we call our dynamic duo because it's probably our most popular product we have at Specialist Trading because people have shown so much success with it. We have people trading in over 80 countries around the world, anywhere from hedge fund managers to people who have been just trading for the last couple of weeks. Everyone gets the same rules. Everyone gets the same applications. Now, if I just want to spend a couple of minutes here, I want to tell you about the great offer we have for all of you today. We're giving you this dynamic duo. That's strategy number 4 along with the PET D. You can have instant access, and we're giving you this 2 for the price of 1 attendee special. Okay? Now, normally you get all of this included. Detailed instruction comes with 5 videos, entries, exits, stops, signal alerts. In other words, these comes with add-ons, so a little arrow or dot will appear when a signal is generated to go long or to go short. You'll also get the add-on that automatically colors the bars either green or red. You'll get all this included in this, plus weekly video trading lessons and access to my personal email, so you can contact me whenever you like. Remember, we are an educational company. This is more of a mentorship, so you can have access to me whenever you like by sending me an email, and I'll answer your questions, and I'll keep in contact with you so that you fully understand everything and you can be up and running. Now, normally, when we have this 2-for-1 attendee special, these 2 products alone roughly cost close to $3,200. We're giving you both of these just for the price of 1, for the price of the PET D, and we're dropping the price dramatically down to $19.95. Okay, we're discounting it, I believe, roughly close to $1,200. Now, I know that there may still be a large sum for you to come up with in just one payment, so we have payment plans available. You can structure some type of payment plans with our trading consultants so that you can be up and running as early as today. But please remember, this deep discount for both of these high consistency tools is only for a limited time. So if you're interested, here's how to take advantage of this great deal. You can go to our sister site, that's protraderstrategies.com, and they market and promote all of my different courses, all of my different strategies and techniques, and you can email their trading consultants at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. And as you see there, that link at the very bottom, you can cut and paste that onto your browser, and that will automatically take you to the sign-up page where you can take advantage of that deep discounted link there and that deep discounted price. Now, if you want to structure some type of payment plan, if you'd like to take advantage of that, contact the people at Pro Trader Strategies, and they can get that up and running for you today. You can come in with a relatively small deposit, and you can already be starting with strategy number 4 as well as the PET D on your computer. Plus, we have a great tech support system available where people will contact you if you have trouble setting it up. We can work with you and have it set it up for you on your computer or on your program. You can be up and running really quickly. Now, one more thing I just want to mention before we go on to questions and answers. If you look in your chat box on the far right, you'll see the link there posted to this special discounted deal, the 2-for-1 attendee special. And you can, rather than copy and paste onto your browser, you can just simply click that on, and it will take you to the live setup page, to the discount page, and you can be up and running in a matter of minutes. Okay? Okay. Now, I want to thank you all. If you had any questions, I thank you all. I'm going to open up the question and answer box to answer them. And please remember, once again, yes, this is being recorded. You can request through Pro Trader Strategies a link to this recording. But please remember, we're only going to have this special dynamic duo 2-for-1 attendee special for the next day or so. So if you want to take advantage of it, don't waste any time. Watch the recording once again very quickly and take advantage of that. Okay, let me open up the questions here. Mohammed asks, what is the full form of the PET D? The full form, I'm not sure what you mean, Mohammed, by the full form. But basically, the PET D is a proprietary tool. Okay, what it is it's an indicator, but a short-term trend identifier. Okay, it's not an indicator that tells you buy and sell signals. Its main purpose is to identify the trend. And it does it better than anything I know. Now, we have tools that are very simple for identifying the overall trend, but this identifies the near-term trend and short-term trend as well. So that's why it's so refined. That's why we really like it. Now, I was introduced to this tool on the floor of the stock exchange some 30 years ago, and it's a simple formula that needs to be calculated. But at the time, we didn't have high-speed computers, or we didn't have programmers then, so we just calculated this on daily bars. But since I started Specialist Trading, we got together with some programmers, and we were able to generate a color bar algorithm so that all you have to do now is see what the color bar is, and that tells you what the trend is. It's that simple. One thing I want to explain, this is not something that recalculates. In other words, once a bar closes, whatever time frame you're looking at, whether it's a 5-minute or a monthly chart or a weekly chart, once that bar concludes, that's the color it's going to be. It does not go back and regenerate and repaint the bar. So it's a fixed tool. Once a bar closes red, that's it. It's going to be red forever. Once a bar closes green, that's it. Now, once the bar is still in play, meaning it hasn't closed yet, yes, it may switch back and forth between green and red, but it's not going to be jumping back and forth every second. It's basically going to be in sync with one color or the other. Okay? Let's see here. So I hope that answers your question, Mohammed. Let's see. I see some people were having trouble with sound, and I see they were told to log out and log back in, so I guess that's good. So in the PET D, the darkened candlesticks are up closes, different from most simple candlesticks. Well, what we do is, I think most people have difficulty with it because you've been taught to apply candlesticks on a dark background, and you have either green or red bodies. It's much simpler if you keep the candlesticks open, meaning that a dark or down day is just simply black, and an up day is open or transparent. It's white. And that's how you can apply the PET D. The down days will be still darkened, but you'll see if the bar is green or red. That way you can have two colors in sync. It's very simple. Once again, this is more of a tech support technique, but you saw how I showed you those charts and how it works very simple. You can tell whether it's an up body or a down body when the PET D is applied. And with a little practice, you'll see how easy it is. Paul says, I've never seen a 10-minute ES chart green for that long. Well, yes, I have, Paul, and you see them a lot more when you have all this strong volatility in play. Remember, the PET D is not something we can alter or go and configure. It's a proprietary tool that is basically just downloaded onto your computer, and now it's set. There's no room there for adjusting or no room there for altering. You basically are seeing what you get there. So yes, many times when you have these volatile markets, you'll see straight up and straight down, and the PET D will give you advanced warning of that. That's the beauty of the PET D. Okay. Matthias once again is asking, is the PET D an indicator? No, because indicators tell you when something is getting ready to be bought, such as an oscillator, overbought, oversold oscillator, where it tells you the markets are overbought, oversold, such as stochastics, momentum tools, RSI. They tell you those things. The PET D is only telling you the trend. That's all it's telling you. Okay, so therefore it's really not an indicator. What it is a trend identifier. An indicator will give you setups and signals for entry and stop placement and exits. This is not used in that capacity at all, okay? Matthias asks, what is the hit ratio of the tool and is it back tested? Well, first of all, Matthias, this would have to be a strategy or a system, I should say, in order to be back tested or hit ratio. This is not a system. In other words, it's like back testing a moving average. For what time frame? For what direction? They're just tools to tell you certain things, the trend identifier of the market. This is just a trending tool. You can't backtest a trending tool. You're just, what time frame are you going to backtest? You're going to backtest on tick charts? Would you backtest on daily bars? And then what market? Only currency pairs? So this is, you can only backtest systems. And in specialist trading, we don't teach or trade systems. We're an educational company, as I stated in the first opening sentences of this presentation, and education is just that. Everyone will take it differently. Some people will decide to use that education and trade conservatively. Others will take that education and trade aggressively. So everyone is allowed to use a little bit of discretion in these strategies. Therefore, you can't backtest any of this. Okay? We don't believe in backtesting at specialist trading. I guess that's the best way to put it. Okay? Let's see. Jim asks, how about sharing some information on what variables and parameters are inputs in the PET D? I lack confidence in tools I don't have a fundamental understanding of. Totally understand, Jim. I totally understand because you're not sure of how well it is, and a lot of people are saying, well, what's this based off of? Give us a little background. The only reason we can't do that, Jim, is because we're in talks right now to actually license this with some institutional firms. And if everyone knows this, it would basically take away our right to license this because people would be reverse engineering and then creating their own Pet D versions. So all I can say is that if you want to do a talk to any of our Pro Trader Strategies trading consultants or do a Google search on us and see all the positive feedback that we've had, go to our testimonial pages and see what people have had with the Pet D. You'll see how well it works. I've personally been using it for roughly 30 years, over 30 years actually. And so that shows its consistency, how well it works. But do a search on it. See people, go to the chat rooms where people have been talking about the Pet D, and you'll see its consistency. I've just showed you roughly 150 slides in different markets in different time frames when applying the Pet D and showing its consistency in tick charts, in the E-mini, in currency pairs, in weekly charts, monthly charts, in stock charts, and you'll see, it's hard to cherry pick, instances where, it works in so many markets and so many time frames. I even showed you how it worked in the E-mini, how it would have actually created a loss, but then if you would have just stopped and reversed, you would have gained that money back. So, we're not just trying to show you everything that works, we're showing you instances where it didn't work, but then it could have got you back on track. Andrea asks, does the Pet D work efficiently in Forex on shorter time frames? Sure it does, yes. We have a number of traders who are in our Forex colleges who just apply it to intraday trading. So they just apply it with intraday trading, and all basically what they're doing is using the same technique of where it's a trend identifier. It's not a system, it's not a strategy, it's basically a trendifier. One of the things I want to mention, if you see here in your chat box, a lot of people are always asking, well, how can I use these? Does it work on my platform? If you see here, it works on Metastock, MT4, TradeStation, Sierra Charts, Multi-Charts, and NinjaTrader. Okay, Thinkorswim and TD America can use it with their free NinjaTrader charts upload. So it works on a number of charting platforms. So it's not something that most people don't have access to. If you have any one of those charting platforms, even Thinkorswim, there is a way to apply it there, as you see stated. Once again, if you're having difficulty, if you're not sure, contact Pro Trader Strategies. They're there to answer any question you may have. They're not going to sell you if you're not interested in it. They'll give you more of the information, because we feel once you get the information, you're going to want to take advantage of this great offer. Okay. So yes, it works efficiently in Forex shorter term time frames. Let's see here. Does it work on an intraday basis in stocks? And yes, it does. We showed you a number of stocks, and it works intraday as well. I didn't have a number of intraday examples for stocks, but yes, wherever there is strong trends, if you want to trade, let's say, Apple or Microsoft, or Amazon, strong trending stocks, but you want to trade on a smaller time frame, you'll see numerous examples of how you can apply this. Okay. Remember, strategy 4 is a great strategy. Its consistency level is high even without the Pet D. But you're going to increase that consistency when you apply the Pet D. That's why we're offering you this Dynamic Duo. This is our most popular package at Specialist Trading, the Dynamic Duo, because it works so well. Now, the best thing about Strategy 4 is that, we're not going to tell you that, well, it only works on daily bars for certain stocks. No, Strategy 4 works fantastically intraday bars for stocks, for E-mini, for the Forex currency pairs. It works on weekly bars. It works for stocks going up. It works for Forex currency pairs going down. So it's a great strategy. It works in any market, any time frame, in any direction. Then when you add the Pet D to get you in sync, to make you have the confidence to take the trade, well, you're ramping up your odds for success even more. Okay. Let's see. How does the Pet D keep you out of choppy markets? It's a good question, Brad. It actually keeps you out of choppy markets because with our strategies, now remember, we're only talking about our strategies that we promote and sell, such as strategy number 4. We need to have certain conditions met. Certain requirements must be met. Okay. Now, mostly in choppy markets, those requirements will not be met. So therefore, a signal will not all the time be generated in that type of environment. But from time to time, let's say you will get a signal in that environment. That's the beauty of the Pet D. The PET D will discern that there's no real trend and will go up and forth back from red to green, and so oftentimes it will not confirm a signal. Will it do it sometimes? Sure, just as anything will, but for the majority of the time, it actually keeps you out of those choppy markets by not confirming anything. So you have the beauty of strategy 4 not generating a signal because of the choppy environment, and then if it happens to, you have the beauty of the PET D having to confirm it with the correct color, and oftentimes it will keep you out as well. So you kind of have this double filter. So that's one of the best things we have about our strategies. They will keep you out of a lot of chop. Not guaranteed. Every once in a while this will happen. It's just the price of doing business. But we feel that more often than not, we've had enough testimonials from our customers telling us how it's totally kept them out of the markets they used to trade in. Okay. Jack asks, do you need to apply multiple strategies and take a majority reading? I'm not sure I understand what that means, Jack, but I think what you're saying is, do you need to have a bunch of strategies to confirm other strategies? No. Remember, I said in the beginning of this presentation, one of the reasons why most traders fail is because they overcomplicate their trading. It's the easiest thing in the world to pile on things onto your trading by looking at multiple strategies, multiple time frames. We don't have to do that with our methods. Most of our methods have maybe 5 or 6 rules, and that's it. And they're very simple. Maybe one indicator, maybe a couple of patterns that you study and learn how to spot, and maybe a couple of weeks at the most. And most of our traders have been, new to trading, and they learn everything within the first month or two, and then we don't hear from them anymore because now they're on the road to be consistent. They don't have to rely on someone telling them, well, we got a buy signal, you have to buy now, and then you blindly buy. You don't know why. You just figure, well, I've got to do it because this guy knows what he's doing. Most of our students go on and then they're on their own. Now that you're a lifetime student, it's never as if you're no longer a student of ours. This is not a subscription. It's a lifetime membership for that low price. And you can always come in contact, get a refresher course, and come and ask me questions. So we're about educating you so that you can make your own trading decisions. We don't want you to rely on an outside source to tell you what to do. That, in our opinion, is a recipe for disaster. Okay? Once again, you're asking about platforms. You see there on the right, Metastock, MT4 TradeStation, Sierra Charts, NinjaTrader, Thinkorswim, and there's a lot of ways to set it up. So just contact the people. Let me go down, scroll down some more questions. I know we have a number of questions here. That's why I wanted to hurry up. Steve, do you think, this is from Roger, hi Roger, do you think it's better to choose, say, a basket of 10 or so stocks versus looking at hundreds? And does familiarity with a smaller group of stocks give you a feel for its action? Basically what Roger's asking is, should I just scan, the S&P 500 every night, or should I just stick to 10 or 20 stocks? There is no right or wrong answer, Roger. I know tons of traders, such as myself, who scan the S&P each and every night. I look at all 500 stocks in the S&P 500. Then there's other traders I know. There's a hedge fund trader who just only looks at roughly about 10 or so stocks, and that's all he focuses on. All right? What's the best way to trade? There is no best way. The only one that is right is the one that works for you, the one that makes you feel comfortable. In other words, I probably would not do well if I knew I could only look at the same stocks every night. I need to look for the signal. I just rely on where the signal setup is. All right? And then I look at my parameters. Is it too expensive? Maybe I can trade it, maybe I can't. Is there no volume there? I won't trade, things of that nature. Where someone may say, I don't care about that. I just want to focus on my 10. All that matters is that you feel comfortable. Same way with time frames. People are always telling me, Steve, what's the best time frame? What is the best time frame to trade? The best time frame to trade is the one that makes you feel the most comfortable. I know a number of traders who only trade tick charts. Just as well, I know a number of traders who only trade daily and weekly bars. Is there a right or wrong time frame? No. The only wrong time frame is the one you're trading that doesn't meet your needs. In other words, if you're the type of trader that wants a lot of signals, then obviously you should be trading smaller time frames because they'll generate a lot more signals. You shouldn't be trading a weekly chart because you'll be twiddling your thumbs for weeks before a signal is generated. Conversely, if you're the type of trader that maybe likes one trade a week, well then look at daily bars. Okay, you shouldn't be trading 500 tick bar charts. Okay. Remember, there's no right or wrong answer. There's no right or wrong time frame. There's no right or wrong scan. It's just the only thing that's wrong is when you're out of sync with your persona. your risk your risk tolerance. And that's what we work. That's why I said this is a mentorship. We work with you on that through our interaction, and we let you open up to share with us what you're looking for, and then we meet your needs with a strategy or a technique. Okay. Just a few more minutes here. We're kind of going over time. I just want to get to your questions, but please remember this is being recorded. I see a number of people are asking, is this recorded? Yes, it is. And this special discount is only going for a limited time. So remember, we have payment plans. If you're really serious about taking your trading to the next level, if you've been suffering in the first couple of months of 2015, excuse me, already, then I really strongly suggest taking advantage of this. We have people who just started trading this just a matter of months ago, and there's even a gentleman that traded this starting in the last 6 months who's already self-sustained now trading this. We're not guaranteeing you or telling you this is what you'll happen with every customer, but he trades in India on stocks that we aren't even aware of, and he says that he's now self-sustained. He quit his job and he's just trading using the PET-D in strategy number 4. Okay. People are asking us about money-back guarantees. No, we don't believe in money-back guarantees because basically I'm giving you 38 years of trading experience, and we're giving you all the rules. We can't, if you're not liking this or it doesn't fit your needs, we can't unteach you that. We can't take that back. And for all we know, we've been burned in the past where people have said they want a money-back guarantee, and then they go and then share it with tons and tons of people. So it's not fair to us. We're the ones who are actually taking the risk by giving you 38 years of experience plus my personal consultation and a membership, and then taking it back. So no, we stand by our word, we stand by our product, and as I said, if you're not convinced yet, do a Google search on my name, Stephen Primo, and on Specialist Trading, and you'll see all the people that have been successful trading our products, okay? Just time for a few more questions here. I know we had a ton, but as I stated in the very opening sentences, I have a lot of information to give you, so I'm trying to get all of the generic questions here. Let's see. Which broker's software does it work on? Once again, we went over those ones, and you see on the far right what are the best ones. Also posted under the chat box is our link to that special discounted offer. So if you're serious about signing up right away, just click on that link. But if you want to take advantage of some relatively small deposit so that you can start up and running today, contact Pro Trader Strategies, and they can put together some type of payment plan for it. Let's see. Someone is asking, what does the PET-D stand for? The PET-D stands for the Primo Early Trend Detector. Okay, it's simply a trend detecting tool. It's not a strategy. It's not a system. I see a number of people are asking questions. What's the average percentage of winning trades? What's the profitability factor? Remember, you can only ask those questions to a trading system. The PET-D is a short-term trend identifier. It's probably the best trend identifier I know of. All right? Its sole purpose is to identify the trend, but it is so powerful when doing that. As I showed you a number of those charts where you would have looked and seen that the markets were basically going sideways. Someone just off site value would have said, well, there's no trend here. We're kind of in a choppy market. I'm not going to take the signal. But once you apply the PET-D, you see that the PET-D was confirming the signal. Remember, it's just a trend identifier. And therefore, all you have to do is have the confidence to take the signal. So you can't backtest a trend, okay? You can't backtest a trend because what time frame, all right? What direction? What market? It's just too many variables, and we're not a systematic backtesting company. There's a reason that all webinars and presenters are required to say that there's absolutely no type of guarantee that the results repeated will be repeated in the future, because most systems are not don't have very high levels of consistency. Therefore, it's required by law that you have to make your attendees aware of that. Therefore, we tell people right off the bat, we don't trade systems. We're not telling you to trade the exact same way in each and every time. We want our traders to be a part of the process. We want you to make your decisions. So you may decide to trade it more aggressively. You may decide to trade it more conservatively. You may take one of our different type of entry points. You may take another entry point. We want you to make those decisions. Therefore, we can't backtest what your discretion is. Okay, so we're not a systematic company. We don't really subscribe to that way of trading. Just time for one more question here before we have to sign off. let's see. Yes, people were asking me what it stands for, and you see the platforms there. Let's see. I think most of the questions here now, what does the PET-D stand for? Well, you just got that. Good question here before we have to complete. Does the dynamic duo work with binary option trading? Because we know more and more of our students are starting to trade binary options. And I'll say right off the bat, I personally do not trade binary options, so I've never used them before. But we are starting to get more and more customers who are applying it to binary trading, and they've shown very consistent results. So having said that, just from the feedback from our customers, yes, it does work. So feel free, if you are a binary option trader, feel free to apply this to it, because it will work. Wherever you see a trend, wherever there's some type of volatility or movement, the PET-D can be applied. And you can also apply strategy 4 to any market, any direction, and any time frame. Okay, it looks like our time is running out. I want to thank you all for attending today. Remember, if you're really frustrated with the results of your trading for the first portion of 2015, I strongly suggest you take advantage of this deep discount. All right, this is roughly, if you purchased this a week ago, it would have cost you about $3,200. We're dropping it down to $1,995, roughly $1,200 less, and we're offering a payment plan. So if you can't meet the lump sum, you can put down a small deposit and start trading right away with it, okay? You see here all the platforms it works with. We have tech support that can help you up and running and help you load it onto your software. You also have constant interaction with me as your personal mentor, so any questions you have, I can answer. So there's a lot of great stuff that comes with this. Once you become a student of specialist trading, you're not a student for a limited time, you're a student for life. So if you're interested in taking your trading to that next level, which is consistency, which is simply simplifying your trading and getting on that road to consistency, I really urge you to take advantage of our Dynamic Duo special offer, okay? I want to thank you all for attending so much today. Please contact the good people at Pro Trader Strategies to get set up. And I look forward to each and every one of you becoming students and members of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.